Hey there, Vinny here from Project Frugal. This is episode 46 of Road to 100k. The market has been turbulent. Once again, what a surprise, but do you like chocolate? Well, I certainly do. I'll tell you a little bit more throughout this video, so stay tuned and check it out. Well, here we go, onto the portfolio. We've got $2,075.49 into the wallet. But unfortunately, the share price has gone down. So last time we checked on this particular portfolio, we were at, how much were we at? Well, over $41,335, I think, off the top of my head. And now, unfortunately, the actual portfolio has gone down, even though we've chucked another $1,000 in it. So at one point, we were $3,500 negative. Now, unfortunately, the last couple of 3 weeks, it hasn't been pretty. The market's gone down. We are now approximately just over $5,000 down on this portfolio, but we'll show you a little bit more. First of all, we're going to go and have a look at this chart. And if we go into the last month, say, we were down 3 grand there, and slowly in the last month, it has gone down 5 grand. So technically, we've lost a couple of grand in the last month. Why is that? Well, it's all to do with interest rates. That's the big problem. If we have a look at the chart since we began, it's very staggered here because we're investing regularly. There was a lull there when we needed some money for some other things. And there's a lull here because sharesies have changed their fee structure. So at the moment, we're just saving money. But in the last, like I say, in the last couple of 3 weeks, the market has actually gone down. So it is not pretty, but we'll carry on regardless. So we got $2,075. Next video, we'll be putting another $1,000 in. The next video will be coming out in a couple of 3 days. And the reason why we didn't post this video last week is because we've been busy doing other things. And sometimes life gets in the way. When you got to do your bathroom, you got to do your bathroom. So there's no time when you're covered in plaster dust to carry on with this particular video series. But we'll do it later. Better late than never, right? Yep. Anyway, let's go and have a look at Yahoo Finance, see what's happened on the S&P 500, because this has a dramatic effect on the New Zealand market. And as you can see here, in the last month, basically the S&P 500 has gone down. If we have a look at the last 5 days, well, there's been quite a dramatic drop there as well. And the last day, you're not going to get some great data off the last day, but let's have a look at the last 5 days. What have we got there? 4,075 down to 3,800. So quite a dramatic drop, 1.5% there in terms of the last closing price. I would expect that'll flow onto the New Zealand market on Monday, where prices will probably be even lower. Yippee! Excellent. So that's the way it is. So if we go and have a look at Denise's actual portfolio here, you can see on Friday just gone, another $430 lost. Ooh, great stuff. But that's the way it goes. And yeah, I mean, there's not much to tell here, really. So as you can see here, $5,065.74 negative. We're going to put some more money in, and we're just going to carry on, because eventually we'll be buying shares at a lower price once we've got enough money. We need at least $3,000 to invest in the Sharesies $15 plan, which essentially will minimize the fees. But ideally, if we can get $5,000, we just pay $15. We get to buy $5,000 worth of stocks. Only get charged $15, which is literally 0.3% per $1,000 worth of stock purchases, which is actually cheaper than Sharesies' old deal that they had, even though, there's a few caveats around that. But that's the way it is. Anyway, the dividends are starting to pay out because of the time of year it is. It's March. And traditionally in New Zealand, March and September are the best months. So we've got $413.78 coming into this particular portfolio in the next couple of months, which, doesn't even cover Friday's loss, which is quite depressing when you think about it. If we go and have a look at the dividends tab here, we'll just go and have a look, because we do have some numbers populated finally onto March. As you can see here in January and February, things are pretty quiet in the New Zealand market, to be honest. So we do have a little bit of stock coming in, some dividends coming in February, $19. Not a whole lot of money, $18 so far in March, with another $287. So this will be over $300 for this portfolio in March in terms of dividend payouts. And in April, at this stage, there will be some more to go onto this when the results come through and all the rest of it. At this stage, we've got $126.42 coming in April. So based on this portfolio, I'm expecting it's going to be over $2,000 for the calendar year from the 1st of January to the 31st of December, at least. Let's go back and we'll see what else we can have a look at here. We'll go and have a look at the share allocation. Nothing much has changed here because we are actually putting more money. Well, okay, there's more money in the wallet. Over 5% of the total portfolio is now in the wallet. We could withdraw that with no penalties whatsoever if we needed the money. We got a couple of grand in there. It's always nice to have. It's not doing anything apart from earning money for sharesies when they'll have it sitting in some bank account somewhere earning a little bit of interest. So good luck to them. But like I say, once we get this up to roughly around $5,000, and if we're investing $1,000 a fortnight, when's payday next time? Oh, it's next week. So realistically, we're probably not actually going to be purchasing any more shares for another just over 4 weeks, and then we will bang 5 grand on the dot into something, and we might have a little bit left over, and that's cool. And then we'll just start saving again. Let's go and have a look at the charts, because the charts certainly won't be pretty reading at all. And as you can see, in the week down, the fortnight down, the month definitely down, the 6 months, yep, we're on another downward spiral. Yes. Overall in the year, nothing. Well, if you have a look at this time last year to this time this year, pretty much nothing's happened. Great. I'm not sure what we'll be investing in the next time we actually put some more money into this particular portfolio. We're going to have to play it by ear. We'll see what the analysts say in terms of their price targets, how much we could potentially make based on what the analysts say. Are the analysts correct? Well, I don't know. Anyway, let's talk about chocolate. So I've just opened this up. We're going to eat some of this chocolate. It's Dairy Milk More with mixed roast nuts, which has peanuts, almonds, and cashews. It was on special at Pack and Save, 99 cents, 165 grams. So naturally I bought probably, I don't know, 12 to 15 of these. It's going to expire in a couple of months. I better get into it. Nice. No endorsement here. Just going to eat it. Nice. Yep. Well, there we have it. So another downturn. Well, a little bit of a downturn there. Yeah, I'm not going to lie. It's a downturn again. Well, that's what the market does over and over again, but we're just going to carry on with the same strategy, and this time we'll be buying shares at a lower price, so at the end of the day, as long as we stay the course, it will be a win no matter what. So thanks for watching. Hope you enjoyed it. Don't forget to like, subscribe, leave a comment down below, and we'll catch you later. See you later.